All right. Good evening from here. I believe you can hear me. Can you see my screen? Let me know if you can hear me and if you can see my screen. Let me confirm that. Can you hear me? Can you see my screen? Okay, fine. Very thank you. Welcome on today's section. We will continue from where we stopped. We're still talking up, still looking at candlestick patterns. Okay, we have a different new concept to look at today, which is candlestick patterns. In our previous sections, we talked about the histories of candlesticks, and then we talked about the bodies of candles. That's what a candle is. We categorized candlesticks, and then we moved forward to knowing the components of a candle, which comprises of an open, a close, a high, and a low. That is talking about the widths, the shadows of a candle. We extended to the different body size of a candle. We have a long candle, we have a small bodied candle, we have a long body candle. So today we'll be looking at candlesticks patterns. Candlesticks pattern is a subtopic. You may want to write the subtopic for reference purposes and reminder, because it's very important you understand and take note of every single thing we are doing here. They will really mean a lot. They will shaping your foundation. This is literally everything you have to know on to analyze the market as a price action trader. This is everything you should know, and you will be knowing it according is this meeting to that. Okay, hello, yeah, all right. So candlestick patterns. Candlestick patterns are one of the most powerful trading concepts. I want you to take note of everything I'm saying for the introductory part of candlestick patterns. I'm introducing this concept now. I said candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable. I want you to underline that word, very profitable setups. I repeat, candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups. A research has confirmed that candlestick patterns have a high predictive value and can produce positive results. All right, so we have some persons who have been trading candlestick for 20 years. All right, and they feel like they cannot switch from candlestick to any other method or any other strategy. So we have a very long record of people who has done a very remarkable approach in the market, trading just candlestick patterns, right? So we're not introducing you to a holy grail. This trading system works, but be prepared to lose some trades, right? Losing is part of this. It's part of the game. If you're looking for 100% win rate, like we mentioned, you should probably look at something else. All right. So I think I gave this a brief analogy or brief introduction, the last section. So on today's section, we will be talking about the engulfing bar candlestick pattern. I have a bearish engulfing bar, which I'm already displaying on my screen. So today we'll be looking at the engulfing bar candlestick pattern. Mind you, we're talking about candlesticks pattern, all right? And I mentioned carefully on the introductory base that candlestick patterns are really profitable setups. You just learn how to identify them, and if you're not learning candlestick pattern, learn it for the major reason of building your foundation of forex trading or any analysis or any market analysis you'll be doing. To be honest, even after going from here, other deeper concepts we'll be looking at are based on everything we're doing. You're a pure price action trader. That is, you have the mind of your own, the trading mindset of your own. You don't need indicators to analyze trade. You don't need strategy built by someone else to analyze trade. We are training you to be so independent that you won't be needing signals from any person to be able to trade the financial market. That is how broad and that is how independent and professional you are going to end up becoming. All right, so we're looking at bearish engulfing bar. And then before that, let me talk about an engulfing bar candlestick pattern. All right, so we're looking at bearish engulfing bar, and this is what you want to note down on as long as bearish engulfing bar is concerned. The engulfing bar, as it states in its title, is formed when it's fully engulfed. So bearish candle, sorry for that pause. I want to fix something. The engulfing bar, as it states in its title, is formed when it fully engulfs the previous candle. Now, there are, if you can see my charts, there's a labeled box for both. There are two candles there. Now, one of the candle is totally consumed or engulfed. All right, one of these candles is totally consumed or engulfed. This is what we call engulfing. Now, the word on its own, engulfing, simply means something attached, right? Something attached, something fully attached, fully engulfed. Now, if you look, you'll find out that this candle, this particular candle has engulfed or can say has overshadowed this other one, this smaller body candle. So we call this kind of setups an engulfing candle or an engulfing pattern. All right. The engulfing bar can engulf more than one previous candle. Now, or an engulfing, whether a bullish, what we get to know whether it's a bullish candle or a bearish engulfing candle, we'll know more about that. But now, let's concentrate on getting what an engulfing candle is about. Now, like I mentioned before, I'm using a display on my screen to explain a bullish engulfing, though this is a bullish engulfing setup. But when it happens on a bearish engulfing setup, as you see on the chart, on the market, on the live chart, I would also explain it broadly. So we said that engulfing is when a candle is fully engulfed another candle. When a candle engulfs another candle, that fully consumes another candle or fully attach its body to another candle, that candle is simply stated or classified as an engulfing candle. The engulfing bar can engulf more than one previous candle, but to be considered an engulfing bar, at least one candle must be fully engulfed. All right. The candlestick pattern consists of two bodies. The candlestick pattern consists of two bodies. It's very important that you know the composition of this pattern, know the psychology behind it. All right. So the first body is smaller. Now, one thing you want to know is, though engulfing candle can engulf more than one candle, more than one previous candle. But one thing you want to know that the candle being engulfed must be smaller, and the candle that is engulfing or that is attaching must be bigger. So we have situations like this where we have the small candle and the full-bodied candle. All right, we have the small candle and the full-bodied candle. So the first body is smaller. That's the first body of this engulfing is smaller. In other words, the second body engulfs the previous one. All right. So this is an example of what we will show. Let me take you guys to the chart, live chat, so we can figure out an engulfing, a total engulfing on the chart. So we're looking for you can see this. Let me button this up. Areas around here, market engulfed price around this zone. So what I'm showing. Here, price engulfed. You can see that zone. So the smaller candle, the white candle, fully engulfed the green candle, right? So this is called a bearish engulfing candle. Reason is because the bearish candle or the white candle is fully engulfed the second candle, that is the previous candle, which must be bullish. Now, when we go more further into classifications of engulfing, we'll look at bearish engulfing and bullish engulfing. So we'll now go deeper to what each candle must possess to be called an engulfing. But one thing you want to understand is this. An engulfing must have two bodies. One, the small body, and the other body that is a long candle. That is the long candle fully engulfing the what? The smaller candle. We can also see some other examples here. All right. So here we have small body, full body. Now the small body is of course engulfing the what? The full body. So these are this could be engulfing candles. So this here is engulfed. This candle is engulfing the smaller candle. And this other candle here is fully engulfing this other candle. So engulfing candles are candles that fully engulfs what? The other. So now let's look at more precisely on bearish engulfing. Let's look at more precisely on bearish engulfing. So this is how bearish engulfing looks. This is how bearish engulfing looks on your chart. This candlestick pattern gives us valuable information about bulls and bears in the market. It gives us what? Valuable information, and then we'll talk about the valuable information it gives us. But then let's look at multiple engulfings, multiple bearish engulfings on the chart. Now you want to make sure that engulfing happens on a down mute yourself for joining this section. So here we have another engulfing. If you can see that clearly, let me make this a total white. All right. So if you can see the chart, you know that there's an engulfing here. All right. The white candle fully engulfed the that's the bullish candle. So this white candle is fully engulfed. The bullish candle rather is fully engulfed by the bearish candle. Now, remember we're talking about the bearish engulfing pattern. We're looking at the bearish engulfing pattern. I'm not talking about the bullish yet. So I'm showing you multiple examples of bearish engulfing patterns on the chart. You understand that? We're looking at bearish engulfing candles. So we're looking at multiple bearish engulfing candles on my chart. So we can classify this also as an engulfing because the bearish candle is longer than the bullish candle. You can also classify this as an engulfing. All right, these are engulfings because the bearish is fully engulfing the bullish. Here we also have another engulfing setup there. So here we have another engulfing setup, another bullish engulfing setup. We're looking at just bullish engulfing setups on those chart. Here we also have another bullish engulfing chart here. All right. So this is what bearish engulfing, I beg your pardon. This is what bearish engulfing looks like, and this is how they appear on your chart. The bearish candle fully engulfs the bullish candle. All right. So as you can see, when this price action pattern occurs in an uptrend, we can anticipate a trend reversal because buyers are not still in control of the market, and sellers are trying to push the market go down. All right, now what this implies is this, that sellers has fully engulfed the buyers. That is, sellers has fully taken control of the market. All right, that means it is a signal that there is going to be a reversal pattern. All right, so if an engulfing bar, that is, if the bearish engulfing bar appears on an uptrend, it reversal downwards. All right, but now there is a strategic way to trading an engulfing pattern. Now you want to confirm that the trend, you want to confirm what trend is playing out. All right, since you know that bullish, a bearish engulfing pattern is a downward reversal movement. So you want to confirm that you're taking a bearish engulfing pattern on a down trend. So if the overall market trend is on a downward movement, you want to consider a bearish engulfing. Now, this is what we mean. So we have here, this is a downtrend from here. I believe you can see my screen. This is a downtrend, right? So for the fact that this is a downtrend, we are more concerned on bearish engulfing candles. So there's a bearish engulfing candle set up here, right at this zone. We have a bearish engulfing setups there. So this simply tells you that sellers are still in what? In control of the market. Sellers are still in control of the market. And it simply tells you that the market is going to what? Continue downwards. So sellers engulfing buyers simply means that sellers have overpowered the buyers and have taken control of the trend. So pulling price down and down and down. Okay? You can't trade any bearish candlestick pattern you find on your chart, which is very important. You know that. You will need other technical tools to confirm your entries. All right. So once you're able to identify a bearish engulfing bar, all right. Now you also should know how to check out other confirmation patterns, which we will get there when we will. But let's keep our focus on what we have on ground. So I have discussed a bearish engulfing bar. I believe the concept is all clear. I'll rephrase before I continue. A bearish engulfing bar is simply consists of what? Two candles. For a bearish, now when we mean a bearish, we mean trend, a price that is dropping. Remember we talked about this when we we're talking about candlestick, on the candlestick formations. And we talk about a bearish as candle that is dropping. So when we say that a candle is bearish, that means it is a dropping candle, right, or a depreciating candle. When we say that a candlestick is bullish, that means we mean that that candlestick is what? Is rising or is appreciating. All right. So now when we talk about a bearish engulfing candle, we are trying to say that a bearish candle engulfed a bullish candle. That is, in simple terms, that a down candle fully overpowered a bullish candle. And for a bearish candle, to identify a bearish engulfing pattern, it consists of two candles. The first candle must be a bullish small candle. And then the next candle must be a bearish long candle. But one important thing is this, that the bearish candle is longer than the bullish candle. In this case, we have a bearish engulfing here because we have a bullish up candle, smaller body, and then we have a longer bearish candle, longer body. So this is for engulfing candles. I believe it is well understood. Let's proceed. All right. So we'll talk about a bullish engulfing candle now. I believe we've done justice to a bearish engulfing. Let's talk about a bullish engulfing candle or a bullish engulfing bar pattern. Now, bullish engulfing bar pattern consists of two candlesticks also. Now, whatever I teach you about pattern, one of the things I will teach you about candlestick patterns are just the opposite of the other. So if it said that a bearish engulfing candle consists of two candles, one must be a bullish small body candle, and the other engulfing candle will be a bearish longer candle. Therefore, if we're talking about a bullish engulfing bar candle pattern, it is just an opposite of a bearish engulfing candle pattern. Therefore, if we are going to have a bearish engulfing pattern in a way that a bullish small candle and a bearish long candle, the inverse of that formation is just going to be a bearish small candle and a bullish long candle. So if we talk about a bullish engulfing bar pattern, the bullish engulfing bar pattern consists of two candlesticks. The first one is the small body. The second is the engulfing candle. All right. The small is the small body, and the second is the engulfing candle. This is the illustration. This is the small body, and then this is the closing open price and the longer body. All right. So when we talk bullish engulfing bar, bullish candle itself are candles that are what? Rising, that are going up. Candles that are going up are referred to as bullish. So if we talk about bullish engulfing bar, that means that bullish candle is finally engulfing or overpowering the bearish candle, right? So if we say that a bullish engulfing bar is engulfing a bearish candle, that is to say that a bullish candle has overpowered a smaller bearish candle. And the psychology behind this thing is just pointing to you that the bearish candle, that is the sellers, has been over-empowered or has been overpowered by the buyers. Remember also that when we're talking about candlesticks, we talked about small body and longer body. If you remembered vividly well, I mentioned one important thing, that small-bodied candle means low buying or selling pressure. That is, when a candlestick is small, it means there is small or little activity going on, or we can say that there are little sellers or little buyers. But when a candlestick is long or has a long body, we mean it also represents high selling or buying pressure. That is, there is more buyers in that candle and more sellers in that candle than the previous, right? So bullish engulfing bar, it simply means that what? The bullish candle is what's stronger than the bearish. That is, it has overpowered the bearish, creating an engulfing bullish bar. Let's go to the live chart and see examples of a bullish engulfing bar candlestick patterns. All right, you can easily find the bullish engulfing bar patterns on uptrend moves. Right, you want to make sure you. Don't worry, we'll talk about tricks and we'll talk about tricks and high profile areas to trade a bullish and engulfing candle or whatsoever pattern it would be. All right, so we have literally a lot of candlestick pattern forming here. At this zone, we had a bullish engulfing. You see that bullish That is, the market, the bulls, fully has engulfed the bears. That is, we have a bearish being engulfed by the bulls, the small candle, and then the longer candle, which means strong selling pressure. And what it simply connotes is that buyers are more actively involved than the sellers. Similar thing happened here. If you can see vividly well that there is a small candle there and then a long candle. As long as the candle is longer than the small body, we can consider it a very valid bullish engulfing candle. It also appeared right on this zone. We also have a bullish engulfing right at the zone, right? So these are, you can go on and on, can go on and on, giving several examples of bullish and bearish engulfing candle pattern. The most important thing is that you understand how to identify engulfing candles on your chart, because it gives you a wider knowledge of what's happening in the market. All right. So the bullish engulfing patterns, bar patterns, tells us that the market is no longer under the control of sellers, right? I mentioned this before. And buyers will take control of the market. When a bullish engulfing candle forms in the context of an uptrend, it indicates a continuation signal. We'll talk about all of this in details as we go more deeper on candlestick patterns. When a bullish engulfing candle forms at the end of a downtrend, the reversal is much more powerful as it represents a capitalization bottom. Now let's see further examples outside from the ones I have given. All right. So here, I think I've shown you something like this before. So we've done something like this, and then look at this. Look at this area. You can see my chart. So look at this. We have a bullish engulfing bar, right? You see, this is the dark candle is a bearish candle, and then the white candle is a bullish candle, which has totally engulfed the bearish candle, signaling to us that buyers are more actively involved in the market at this particular phase or this particular time in price, right? You can also see for the bearish too. Okay, sorry, this is not. So basically, all of the things I have explained are majorly what? Engulfing candles. Remember, there are two engulfing candles. If it is not a bullish, that is going to be a bearish. All right? And the engulfing candle consists of two candles, two candlesticks. The small body and what? The longer bodied candle. All right? So we're done with engulfing candle right now. So we'll give room for space for questioning on the group. That is, if you have a question, you can drop them on the platform. I would attend to them on that. So let's go to the next concept we're looking at. We're looking at the doji candlestick pattern. The doji is spelled, this is the doji on the chart. The doji pattern. So this is what the doji pattern. This is the doji, right? And I am going to display what I mean roughly on the screen. I'm going to display doji right away. So here we have the doji candlestick is right on my chart, on my screen rather, doji candlestick. All right. So the doji candlestick, doji is one of the most important Japanese candlestick patterns. When this candlestick forms, it tells us that the market opens and closes at the same price. which means that there is equality and indecision between buyers and sellers. There's no one in control of the market. All right. Now, what the doji simply entails is what? Equality. Now, look at the open and the close of this candle. They are almost at the same price. That is the close and the open, right? The close and the open are almost at the same price. So what it entails is that there is an indecision in the market. Buyers and sellers are disagreeing on both, all right? But it is also important you see that the opening price is the same as the closing price. This signal means that the market did not decide which direction it will take. Now, it is very important to know that when this pattern occurs in an uptrend or a downtrend, it indicates that the market is likely to reverse. So whenever we have a doji, it simply indicates going to reverse. You can drop a question on the chat. Once I'm done with any section, we will come back to the platform and talk more about it. So the doji candlestick, when it appears on a downtrend, it means a reversal downward. When it appears on an uptrend, it means a reversal downward. When it appears on a downtrend, it means a reversal upward. But also, it is important to know that a doji has a bullish reversal and a bearish reversal. We'll talk about that more in detail. All right. So let's look at figuring out doji candlesticks on the chart. Now we see a doji here, right here. We see a doji here. That's a doji candle, right? We see a doji there. All right. We're still going to look for more doji candles. Like we mentioned previously, doji candles simply indicates what? Indecision in the market. And any doji candle that happens at the top of an uptrend simply indicates that price is likely going to reverse. All right. So that is what a doji candle entails. We're still looking for live examples of where the market recorded a doji candle. We find a doji right here. You can see a doji formed right inside this box. All right. You can see my chart. You can see that there's a doji formed right inside here. One very important thing I want you to do is after any section we treat, you go back to your chart. I believe you have access to tradingview.com. Go back to your chart and do more analysis, more checking, more research. That is how you get better. You don't get better by just getting comfortable with just what the teacher. You go and master it. Give yourself more screen time to learn more. Here we have a doji, right? All right, so we have a doji here also, which indicates indecision in the market. I think that's a good example to indicate a doji for me. Now the chart above, let me see if I have another chart that simply gives us a more doji. Okay, all right. So here we have this. You can see my screen. All right. So this chart above shows how markets change direction after the formation of a doji candle. Now, remember that I mentioned previously that a doji simply means indecision in the market. And if it happens at the top of an uptrend, it indicates a reversal trend. It's going to reverse the trend. And if it happens on a downtrend here, if a doji appears here, that is a bullish doji, it's simply going to what? Reverse the trend. the market, as you see here, the market was trending up. That means that buyers were in control of the market. So when you have a market trending up, is a bullish candle. That means buyers are in control. The formation of a doji candlestick indicates that buyers are unable to keep price higher, all right? And sellers push price back to the opening price. This is clear indication that a trend reversal is likely to happen, all right? Remember always that doji indicates equality and indecision in the market. You will often find it during periods of resting after big moves, higher or lower. When it is found at the bottom or at the top of a trend, it is considered as a what? As a period trend is lost on its strength. As a period trend is lost on its strength. So it is just that what it means. Doji simply means an indecision in the financial market. We have illustrated two basic candlestick pattern. I talked about the engulfing, the bullish and the bearish engulfing pattern, and then now we talked about doji candlestick pattern. You have a question, drop it on the chat, on the group. I will explain deeper on these terms, but on your own, research more on it. On our next section, we continue from here. Thank you very much and have a wonderful day ahead.